Rohr here with an early global view on Tuesday, June 30th, 2015. It's currently 7 a.m. U.S. Central Time. After a wild day on Monday due to heightened Greek concerns, we are going to find that this is also kind of concise for a global view because a lot is pretty clear-cut as markets ratcheted back to key areas. So what does all this mean to the markets? And what we have so far on these renewed talks saying there is some kind of fudge going on yet again in the Greek and Troika negotiations, whereby the Greeks will accept the package pretty much as laid out on Sunday, the final offer, so to speak, from the creditors, and yet the creditors will agree to revisit debt sustainability, which is to say Greece has said right along, and there are many, including this analyst, who agree that their debt level is just not sustainable. There's no way to cut or rationalize their way out of it. They need a real long-term stretch out or actual underlying debt reduction to make it work. So what this means is that the S&P 500 future, SEP hourly on the left, 30-minute on the right, is up to 2,067 this morning. Now this is interesting because 2,060 to 58 is one of those old historic thresholds that is important, with not much below it until 2040 to 37. So it's going to be very interesting to see how this plays out, not just on a higher opening today, but seeing if the late panic yesterday that overran 20 to 60 to 58 is reversed, the market can hold that level. If not, 2040 to 37 becomes very critical for reasons we will see on the weekly charts. Even if it should rally back, obviously you've got fairly big resistances back up at 2075 to 78 for one, and back up in the 2090 to 88, the market gap below on the opening yesterday. So we shall see. And other than to say, even on a rally, the hourly MACD will remain out below its lower runaway band for a while, leaving the market prone to sell-offs. There's not much else to say, so that pretty much does it for the short-term view of the S&P 500 future.